Well, with banks yesterday rising almost 5% on the back of that Amcon news, one would have expected to see more of a positive move on the overall bourse. I mean, yet we saw this marginal gain filtering through. So what's adding the pressure here, offsetting those dramatic gains on the banking front?
Hello, good morning. Thank you for having me today. Yes, as you mentioned earlier, the market appreciated marginally yesterday. We should have actually gained more than that, but because of this strike that held in Nigeria yesterday, so it just appreciated marginally. But going forward today, we still expect the Amcon, the pronouncement of Amcon to buy the share-backed facilities from loan-performing banks from the banks to have positive impact on the market. The 60% premium on the 60-day average for the period ending November 15th is a good development for the market, and a couple of them will sell at a huge premium. Now, so we expect these ones to affect the market, and investors are taking position ahead of these.
So where we are sitting above a key psychological level at this point, above 25,000 marks on points on the NSE, where to from here on out? What kind of levels are you targeting by year end?
Now, in our Q3 report that we wrote about a couple of weeks back, we have actually anticipated that the market has the capacity to return between 12.5 to 17.5 in Q4, which will bring the Alishia index appreciation to about 25% to close the year. As at yesterday, it was about 22% year to date. So we still expect that the current situations in the market will ensure that the market closes in the region of 24, 25 to end the year. So if you add that one to the current 25 points mark, we may be talking about 26, 27,000 for Alishia index to close the year.
Well, we'll be keeping an eye on that prediction and just how close you come to it. In the meantime, how are you playing this market right now? Where is bulk of your focus? Are you focusing primarily on the banking space?
Yeah, within the banking subsector of the NSE, there are a lot of values there. Like I mentioned earlier, the purchase of non-performing loans from these banks will improve their liquidity, will increase their bottom line, improve their bottom line, and give them the ability to pay good dividend to end the year. And it even enable them to lend money to the real sector of the economy, even in 2011. So in that subsector, we have some preferred stocks there. We have Skybank, we have GTB, we have First Bank. I think for now, Zenith Bank at 15 naira, we think the price is given the level of return we expect from there, it's fairly priced. So our rating that we released yesterday is actually a sell at that price. We think it should be around that area. But in another subsector of the economy, we still have CNN, of course, that appeared yesterday about 5%. We equally still have value stocks in the petroleum subsector, Oando, they are mobile. These are good stocks that investors can take advantage of, and they're ahead of.
In fact, yesterday, Oando accounted for what, 28% of the total value traded on the day. What's the motivation behind Oando here? Are you looking at it reaping the benefits of the petroleum industry bill, which we've heard would be cemented hopefully by the end of this year?
Yes, absolutely. You are correct. We expect that one to have positive impact on the earnings of Oando. We expect the regulation, which we have said is the answer to the problem that dominates the subsector, to come on next year. Oando is one of the companies that is listed today that is involved in the upstream sector of the economy. And so these are positive, gives positive outlook to Oando. And again, is the fact that the current arrangement whereby federal government is issuing bonds to oil marketers, oil majors, to encourage them to import, and therefore reducing their financing expenses and improving their bottom line. And if you like, the current price of Oando is grossly undervalued, and the prospect there is immense. Dividend yield is very good, and so if you put all these factors together, I think investors should put in money there ahead of good return to come.
Well, you highlighted CCNN as a cement player. How's that stacking up against the likes of Dangote Cement? It traded down yesterday, closing on offer, and we're seeing participation pretty evenly matched. Yesterday's participation on that stock, 55% foreign and 45% local.
Yeah, for the Dangote Cement you mentioned, recall that at that time we discussed that the major issues we have with Dangote Cement at the moment is because of the floats. It accounts for about 26% of the entire market size now. The business model is very good. Excuse me. The business model is very good. The earnings, the forecasting is very good, impressive, very good. But then the fact that the float is very little, just in the region of about 4%, will not even allow most institutional investors who will want to take advantage of that will invest in it. But again, Dangote DIL has rolled out programs to ensure that they sell off within the next 18 months and to ensure that they comply with the 25% floating requirement by the NSE. So, but the future is, I think, is good. CCNN recently had a core investor and is expounding in the geographical region in this market where it's playing in the northern part of the country. So the business model is good, and if you look at the effort of the Nigerian government to ensure that they improve infrastructure, which definitely will lead to construction work and high demand for cement, I think these are what investors are looking at and showing that positive outlook for this subsector of the economy.